What's shaking, everybody? My name is Ricky, and welcome to my channel, Right Coast Crypto, where I will do my best to bring you all the happenings in the crazy world of crypto. Be sure to like, share, subscribe, hit that notification bell, drop a comment down below, and let's drop right into the madness. So, first, I want to start off this video by saying thank you to somebody that has shown me a lot of support. My friend Tony the hippie from California. Me and Tony met about 4 years ago. And I am blessed to have developed a friendship with Tony that I fully plan on continuing through the rest of my life. Tony has become somebody that I consider a brother, and he did something awesome for me this week. Tony knows that I've been wrestling with the idea of starting this crypto channel. He knows that I have zero experience in YouTube whatsoever. And to show his support, Tony got my address this week and ordered me this awesome Dixon flannel that is black and yellow. And on the tag, on the pocket on the shirt, it says Moon, and then on the pocket, or not on the pocket, on the tag of the shirt itself, it says Dixon with a giant moon on it, because he knows that I keep talking about how I'm gonna ride this crypto train to the moon. Full disclosure, I am not a financial advisor. Please don't do anything based on anything that I say. That would be an absolutely horrible idea. And yeah, so I'm going to get into it. The gist of this video is Brian Brooks from the OCC, or formerly from the OCC, did an interview with a woman named Simone Maini. She is the CEO for Elliptic. And if you're wondering what Elliptic is, like I was, Elliptic is bringing compliance to crypto assets, blockchain analytics for crypto businesses and financial institutions, manage financial crime risk, achieve regulatory compliance, and grow with confidence. I kind of wonder if the guys over at Ripple were using an Elliptic. If they weren't, they probably should have. And if they were, I don't know if Elliptic is doing such a good job on achieving regulatory compliance with their clients. Now, with that being said, Brian Brooks gave a very, very powerful interview with this woman named Simone. He goes into the current state of the banking system and where he would like to see the United States grow and prosper in this new financial system. He talks about how blockchain and crypto is the future, how banking charters are going to be given out. There's a whole bunch of stuff that Brian Brooks touches on. I'm going to do my best to try to narrate this and give my insight and some feedback. But I'm going to let Brian Brooks do most of the talking because I feel like he knows a little bit more about this than I do. Please pay attention. I'm going to do my best to let you guys know where the time steps are in this video as I go along. Again, I'm sorry, I'm new to the YouTube space. My videos are not flowing like I would like them to yet. They are getting better as I go along. Please work with me. And here, you know what? We're just going to jump right into it. Here we go.
It's not that banks are okay, trading Bitcoin. It's that Bitcoin and ETH and stablecoins, they are banks. Blockchains fundamentally are banking because what they're doing is allowing the transaction of value across networks, which is what banking has done for 500 years. They're doing it in an orthogonally different way, but that's what banking's about. And so when you see us, for example, as we will do soon, start chartering as banks, companies that are crypto companies,
Do you guys hear that? They're going to start chartering as banks cryptocurrency companies. That alone is huge.
You'll
Here we
start
go.
to understand that we're not necessarily trying to make it so that big banks can dominate the crypto market. We're trying to tell crypto participants that a bank charter might be the right form for you to do what you're doing.
Now, that's very important to pay attention to. Brian Brooks is very well versed on the crypto universe, and I think he is somebody that truly has the best interests of the American people uh, in his sights. I believe that he wants us to prosper and be leaders and innovators in the cryptocurrency space, and he is pushing for that. So let's jump right back into it. Here we
And
go.
there's a lot to unpack there, but I think that's the big.
Thanks, Brian. Yeah,
Actually, I'm going to fast forward real quick. Brian talks about two trends that he has been seeing recently in the financial markets, the fintech markets, and I'm going to jump right to where he speaks about that.
I've said this in many different fora, there are two major trends going on in the economy right now. There is a trend toward fintech. That's what I call the unbundling trend, where more and more people are looking to achieve a bespoke financial services experience away from their depository institution. So that's why some of these payment companies and some of these marketplace lenders have gotten so much adoption. It's precisely because they're not deposit takers, right? They can focus like a laser on one thing, and customers like that. So that puts pressure on banks, but it also puts pressure on us to think about, if those are banking activities, how can we keep them in the fold of our chartered institutions? But the other most important trend, and this is a longer term trend, is the trend toward decentralization. It's the same trend that drove us away from libraries and post offices and onto the original internet.
Listen to what he is comparing DeFi to. He's comparing DeFi to the birth of the internet. The internet, the same internet that is enabling me to speak to you right now, the same internet that enables you to order groceries from your doorbell, the same internet that allowed me to send instant messages on AOL and MySpace. That internet.
And that trend inevitably will transform the delivery of financial services. And I say inevitably because single points of failure and vertically integrated stacked type of tower companies are rigid. They have no incentive to innovate, and eventually they are subject to risk and resiliency, right? Because there's a single attack vector. Versus networks are highly stable.
Inevitable. Okay, so I'm going to jump ahead to 15 minutes and 25 seconds into this video. I'm sorry. I'm going to jump to 15 minutes and 25 seconds into this interview where Brian Brooks talks about crypto banks.
Crypto banks that are able to hold stable coins that reflect value denominated in the fiat currency, but that is a chain native asset. And you need to have real cryptocurrencies over here where they interact directly with each other with no need to ever off-ramp into fiat, right? Fiat ultimately will be a legacy thing of the past, in much the same way that people think about pennies or,
I feel like he was kind of describing XRP there.
shillings or whatever it was that people used in the 17th century. Those things will eventually, I think, go away in favor of a chain native representation of value. And so that's what has to happen. But for that to happen, you have to charter as banks companies that are able to offer the full suite of services that we all need as human beings. Because think about it, however cool crypto is, you still got to pay your student loans, right? You got to pay your taxes. You need to be able to finance your education, buy a car. I mean, there are things you have to do. And right now, you really can't do that in crypto because of this need to exit your investment asset into a bank account so that you can go use your credit card. That'll change.
The elimination of having to deposit your money off of one of these exchanges into your bank account for you to utilize those funds is going to be obsolete. Okay, I'm going to fast forward to 17 minutes into this, where Brian talks about crypto charters.
First of all, with the same rigor and the same risk management that we would evaluate any bank charter. Okay, so whether people are engaging in finance and financial services in fiat or in crypto, the issues remain the same. If you're a borrower and I'm a lender, it's important that you repay my loan. And I need to make sure that you, as the lender, have some way of evaluating creditworthiness. And we will apply the same standards there that we would apply to any bank, right? Because people are still doing the same things. They're just doing it, on a different platform.
The regulation is coming to this space.
Same thing with sort of financial viability. You need to be a profitable company because we don't charter banks that are likely to fail. We only charter banks that have a path to profitability. We look at the management of the company to make sure that you have people who are experts in the relevant technology, but also in the relevant risk management, credit, skill sets, all of those kinds of things. So when we announce our first crypto bank charter, which, here's my teaser, will be soon.
Did you hear that? They are announcing their first crypto bank charter. Absolutely huge news for this space. What a teaser.
What you'll see is that we've applied all of the rigor. And so we're not trying to bring risky businesses into the banking system. But what we are trying to do is make the charter flexible enough that it can accommodate different ways of doing business.
Okay, I'm going to fast forward to
All
21 minutes where he talks about unhosted wallets.
Unhosted wallets could belong to bad guys, and there must be some way that we can deal with it. So how do you do that? Well, if you look at the FinCEN rulemaking that came out, or the related President's Working Group statement on stablecoins, which had some similar language, those groups were careful to be what I call tech agnostic about how to achieve compliance. So sure, you could comply if you simply did not allow transactions to unhosted wallet addresses. But of course, if you did that, what's the point of crypto, right? Or you could have a risk-based approach, which is generally what regulators look for any risk, which does not mean perfect compliance, but it means reasonable compliance relevant to your risk profile. And that might include things like, for example, geofencing sanctioned countries and having some way where you can ping your send receives.
Geofencing sanctioned countries. Now, this is really important, guys, because I know that the United States government has had an issue with Russia, Iran, China, and these other countries that we have sanctions on, turning to cryptocurrency to avoid these sanctions. So what Brian Brooks here is talking about is huge in allowing these companies to have the ability to geofence a sanctioned country. Because right now, they are completely maneuvering all of our sanctions by diving into the crypto markets.
Against a blacklist out there. And it may also include using an Elliptic type of service or building protocol level solutions to allow you to validate that the person you're sending to isn't somebody who's a bad guy. Now, whether the right approach is to actually collect name and address information for
KYC,
that person, or whether it is instead to simply validate in some fashion that whoever that person is, they're not a bad guy, one could debate that. And I think that's what regulators talk about. But at the end of the day, I think that the most promising future for crypto will require one of two things, and maybe both. First of all, Simone, it's going to require a company like yours to achieve broad adoption so that there's confidence that these chain analysis technologies can trace adequately, can do enough to get regulators comfortable that the odds that money is being sent to Osama bin Laden are really low.
XRP Ledger works with something like 50 banks, central banks, and governments.
I know how that works, but it's possible not everybody on the call does. I know how it works because when I worked at Coinbase, I had a group that reported to me whose full-time job was doing chain analytics, using Elliptic and Cyphertrace and chain analysis, among other things. And we know that we worked directly with FBI agents and U.S. attorneys' offices, intelligence officials around the world, to catch bad guys, whether they were human traffickers or drug runners.
Don't do stupid stuff, guys.
And we did that every day, and we won awards.
They're going to catch you.
We know how well that works. At a senior policy level, I'm not sure.
Okay, I'm going to jump ahead to 26 minutes and 30 seconds into this video where he starts talking about banks on the blockchain.
Months ago, talking about banks supporting stablecoin projects by, among other things, holding reserve deposits and doing other things. That's fairly easy stuff. The much more interesting stuff is envisioning the future role of banks on blockchains. And what our most recent letter said was banks can connect as nodes on blockchains for the purpose of supporting and transacting payments. So if you think about it, the networks that are transacting these stablecoins are not their own separate networks. They tend to be the Ethereum network or the Algo network, or there are a number of other networks that some of these interoperable stablecoins are now able to connect to. And what we're saying is, hey, a bank can be, a staker on
a bank could be a staker
the Ethereum network,
or the Polkadot network,
and in doing so, will then be able to transact and validate transactions that are, creating Ethereum tokens for them as a validator, while maintaining the network that is the network that stablecoins transact.
Okay, I'm going to jump to 3245 where he goes into about clarity.
Ambiguity when it comes to what's actually expected from a compliance program, from a practical perspective. For example, when it comes to actually the custodying of digital assets or stablecoins. So, when do you think we can expect that further clarity around this? And do you agree that it's necessary in order to give banks the confidence they need to start doing some of these activities?
Yeah. Well, so literally just this morning, I woke up and I had a message from a friend of mine who runs a fund that's invested in crypto assets, among other things. And this friend told me that he's already seen some changed bank behavior just over the last 3 months. So
already the banks over the last 3 months have been changing their behaviors. This is the same banking system that hasn't changed for the last 50 years. They are moving quickly to adopt blockchain and cryptocurrency, because if the banks don't move quickly, the banks are going to be obsolete.
So I would first of all say,
and remember what he said, the blockchains are becoming banks.
Whether and how much more clarity is needed is kind of an empirical question that we don't know enough about yet, because we pumped all of this stuff out in a very short amount of time. So if you think about what we've done in terms of clarity already, we have 3 interpretive letters, one on custodying crypto assets, one on stablecoin reserves, and then one on connecting the blockchains and payment networks. We have my piece yesterday on decentralized finance and what that means for the future of bank regulation. And very shortly, you'll see the first crypto bank charter come out. Okay, so all of those data points will be out there.
Decentralized finance, or DeFi. So,
okay, guys, I'm going to jump ahead to 36 minutes and 38 seconds. This is where starts to get good right now. Brian Brooks does a very deep dive over these next couple segments. We're coming up to the end, guys. Hang out, stick around to the end. I promise you it's going to be worth it.
Can you just briefly explain what you mean, first of all, by a self-driving bank?
Yeah, so I'm pretty excited about that term, I have to say. I've already seen it stolen by a couple of conference organizers literally in the last 24 hours, so that's how you know it's successful. The concept basically is this, is look, what we do at the OCC and at all bank regulators really, is we administer a whole set of rules that are mostly designed to constrain bad behavior by bankers. We really do very little about banks. It's mostly a set of rules that say, hey, boards of directors cannot engage in self-dealing loans with themselves, or bankers who commit fraud might be banned from the industry or have to pay a penalty, or we need people to make credit decisions based on a list of factors, and if they don't, then they'll get in trouble. It's mostly about individual behavior. And when we charter a bank, by the way, we issue a charter to a group of organizers. So you have to have 5 people on a board of directors in order to get a bank charter. So the question I ask in the article is, if you look at these DeFi protocols, the more mature DeFi protocols basically are offering everything banks do. They offer payment services. They offer a chance to engage in exchange. They offer lending and borrowing options and a whole bunch of other things. And there are no human beings associated with them. They're just open source software doing all that stuff. So it's very like self-driving cars, right? Historically, all the rules of the road were about human beings. Don't drive while drunk, drive the speed limit, use your turn signal, get a driver's license. Those aren't rules about cars, they're rules about drivers. What do you do when all of a sudden there is no driver? Who's responsible? How do you make sure the cars, who are you regulating? If you're no longer regulating people, you have to regulate the thing. And so what I talk about in the article is there could well be, and I think we're on the way to having a series of bank-like software packages where I can simply log on to an internet address and I can say, I need a loan at 4% for 3 years, and that DeFi protocol will find that for me.
The future is approaching, and the future is approaching very quickly. Huge changes are coming. Okay, guys, I'm going to go to the last part of this interview that I honestly believe is the most important. Brian Brooks gives some very powerful and passionate words about where he wants, or where he thinks the direction of our country is headed in regards to fintech and crypto. I think it's something that everybody needs to listen to. Please be sure to stick around to the end of this, guys. I promise you, Brian Brooks' words are worth listening to.
The next administration to keep in mind, what's your call to action to those that are following in your footsteps?
I want to be careful how I say this, but because I'm going to make 2 points that might sound like they're in tension with each other. The first is, it is super important, not just in this country, but globally, that we stop politicizing tech. Somehow, for a variety of reasons, technology itself has become highly, highly political.
If technology does not stop getting politicized, it is going to completely stifle innovation in this country, and Brian Brooks is well ahead of it.
And the ability of the United States to continue to lead in innovation, for Silicon Valley to deliver the life-changing things that it's delivered, from Google to Amazon to smartphones and everything else, is at risk if tech becomes a Republican versus Democrat issue, or a Labor Party versus Tory Party kind of an issue. We have to resist that. Here's the statement that will be somewhat in tension with that, which is, on the theory that hard facts make bad law, we had a really, really awful event in the United States last week, as everybody knows. I mean, we saw things that were not worthy of a mature democracy in the 21st century, not worthy of the heirs of Thomas Jefferson and James Madison, okay? What has followed from that, however, is truly chilling. So now you've got payments companies saying that they won't process the payments of people who are on a certain political party who voted one way on a contested political issue. You've got MasterCard and Visa beginning by saying they don't want to process payments for pornography, but now saying they also might not want to process payments for guns or for tobacco or a series of other things that aren't illegal and that people want, and it's their money. We live in a world where not only information, but also money might be controlled by a handful of elites who might not like the way that any given one of us thinks on a given issue. This is what decentralization is about. In the world of crypto, there is no CEO to deplatform, right? Crypto is about freedom. And if you didn't believe that freedom mattered last week, you should think it matters today.
Very, 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 very strong words coming from Brian Brooks, man. I truly hope that wherever Brian Brooks lands up, it will be somewhere leading the charge in the DeFi and the crypto space. Again, thank you guys for taking the time to listen to my video or watch my video. I'm going to take a second right now and give a couple shout outs to a lot of the people in the YouTube community that I follow that have inspired me to put out some content and dive into the cryptocurrency space head first. Crypto found me at a time in my life when I truly needed something to put passion into, and crypto found me at the right time, and this YouTube community found me at the right time, and I wanna shout you guys out. So, Digital Perspectives, Digital Asset Investor, Moon Lambo, Bearable Bull, James Rules XRP, Working Money Channel, Jungle Inc., Crypto Airy, And Bank XRP, you guys are awesome. Oh, did I not say blockchain backer? BCB, man, I can't believe I forgot you. I'm sorry. All of you guys, I appreciate the content you put out. You guys inspire me, and I will be putting more content out. Thank you guys. Tony, thank you for the flannel. And remember, guys, in the great ocean of life, the only way to catch that next wave is if you just keep paddling. I'll see you on the next one.